In my previous video, I showed you how to profit when supply or demand hold. But what happens when they fail? Because they do fail, and when they do, some of the biggest trading opportunities can begin. Most traders ignore a broken supply or demand zone. I do the opposite. Because once institutions stop defending one area, they usually start defending another. In this video, I'll show you exactly how I use volume profile to identify when supply or demand has been broken, and more importantly, how I take advantage of it. Price has broken straight through this demand zone. And not only has it broken the zone, it has done so with very little resistance. So at this point, there is no point to look for buys. The buyers have clearly lost this battle. I want you to pay attention to one level in particular, the fixed value area low from our previous demand zone. Now watch what happens. Price rallies back into that zone and look at that rejection. Not once, but twice. And why? Because buyers no longer control this area. The demand zone has already failed and the sellers won the previous battle. So that means there's a good chance they'll defend this level when price comes back. And that's exactly what happened. Every rejection provides more evidence that sellers remain in control. And eventually, price moves lower. Now, this supply zone gets taken out, but in this case, you need to be very careful because yes, there is closures above the fixed value area high, but it is still just consolidating. It is not a clear breakout. But eventually, price moves up. We get multiple candles above the fixed value area high. So now it is just about waiting for a retracement. And when price comes back down, we actually get a closure below the fixed value area high. So does that mean that there's no trade? Not yet, because the fixed value area low is still holding. And as long as buyers are still defending this area, I'm still interested in looking for longs. And price eventually breaks out, and once price breaks above the fixed value area high, that is your cue to enter and watch what happens. This is why I don't just focus on one volume profile level. Value area high, POC, and value area low can all become important depending on how price behaves around them. Volume profile isn't about predicting where price will reverse. It's about reading which level institutions are actually defending. Now let's look at this example. This supply zone gets taken out with ease. Price continues holding above the fixed value area high. I'm only interested in looking to buy. The next step is simple. I'm waiting for evidence that institutions are defending the fixed levels. And here comes the first rejection. This is where I'd be looking to enter. But there is one big problem. Price never comes back to where that first rejection took place. So there is no trade. And then something else happens. Price starts closing below the fixed value area low, multiple closures below it. So at this point, I'm finished looking for long opportunities. There is no evidence that institutions are defending these levels anymore. And then, watch this. Price rallies, breaks higher, and eventually would have been take profit. So was this a missed opportunity? Absolutely not. A winning trade doesn't make it a good trade. Because ask yourself, where was the evidence that the fixed levels were acting as support? There wasn't any. Could I have bought anyway? Yeah, of course I could have. Would I have made money? Yes, I would. But would I take that trade again? Not in a million years. because I'm not trying to predict the market. I'm waiting for the market to prove something to me first. And I honestly would rather lose money following my rules than make money by breaking them. Because over hundreds of trades, discipline always beats luck. And I promise you this, without rules and without structure, you simply aren't going to survive the market. Now, before you start practicing this, there are a few very important things that you need to know. First, you need to be able to identify a strong supply or demand zone. In this example, this is a strong demand zone. Look at that consolidation before that breakout candle. That's exactly what you are looking for. Next, you have to draw your fixed range volume profile. And this is very important. You need to draw it on the consolidation before the breakout. I can't stress that enough. Next, you will have your three key levels. Have our fixed value area low, our fixed POC, where the highest amount of volume was traded, and our fixed value area high. As you've seen throughout this video, all three levels can provide valuable information. Now let's look at this example. Even though price has closed below the fixed value area low, I would not be looking for short opportunities. And why? Because this isn't a convincing breakout. You want price to come down and it to be a more convincing breakout, and that way I know demand has been taken out before I am looking for a retracement back. And in this example, we just don't have it. And in my last video, I got asked a very good question. It was, what time frame do you use to confirm the breakout? And for me, it has to be at least a 4-hour candle close. Not 15 minutes and not 30 minutes. Those lower time frames simply don't carry enough weight for confirming whether institutions have actually taken control. You can still do this on the higher time frame, like the daily time frame, if that's your style. You want to do, just backtest it. But for this video, I've kept everything on the 4-hour chart just to make it easier to understand. I also trade higher time frame supply and demand, but the principles you are learning here are the exact same. Now, here is something very important. I use the 4-hour for confirmation. There has to be a 4-hour closure, but I don't necessarily use it always for my entries. Once I have confirmed a breakout, just say, for example, there's a 4-hour candle closure here. When price retraces back to our key levels, you can go down to the lower time frame, the 30 minutes or the 1 hour. I prefer the 1 hour to the 30 minutes. You wait for a sharp rejection, and when price comes back below that first candle that gets rejected, that is your entry. Now, if any part of this isn't clear, let me know in the comments below. So check out the fixed range volume profile for yourself. It's a free indicator on TradingView. You have nothing to lose and so much to gain. Backtest it on broken supply and demand zones exactly like I showed you in this video. And make sure you change the settings so your settings match mine. I use 128 row size with 70% value area because I find it gives me a much clearer reading of where volume was actually traded. And if you are new to volume profile, I've linked my previous video at the end where I explain exactly how I use it inside supply and demand zones before they break. So I highly recommend you watching that first because it will make everything you have learned today fit together. And if you enjoyed this video, make sure you are subscribed because I've got plenty more content coming on institutional trading, volume profile, and supply and demand.